So now we continue with the summary or addition of entry and exit setups for the volume profile strategies. So the different opening strategies, the different variants. You just learned 4 of them. So let us continue with them. There are multiple levels to trade at a level of interest. The level of interest most of the time is the value area high or the value area low. And you can choose very defensive stop loss, but of course it's always interesting to increase the risk to reward, not always, but most of the times. And we will give you a brief overview about possible entry or exit options. So you can use inside bars or outside bars. For example, you can use engulfings for a sign of strength, or you can use the volume spike following an inside bar. So you have a big move, then you have an inside bar, and there is no real interest anymore as a reversal signal. So let me take the pen. It would look like this. You have a price movement. For example, you go to a value area high of the previous day. There is the POC, there is the value area low. This is our goal. And we look for a short setup here because we opened in the value area. We'll go high, and then we will have one big candle that will go to the value area. Maybe with a small wick on the top and the bottom. And then we will create a very small inside bar. You can use this as a reversal sign, so we continue downwards. Or you can use engulfing, so you have an upwards structure, and then you have one big engulfing candle short, and you can enter here and then continue downwards. There are different possibilities, there are different things that work in the different markets best. You need to spend time in front of the charts, and of course we will also give you information in addition in the Discord chat. But you need to build a strategy for yourself, and that fits you because you need to trust the process. Those are the things you can use, and you can also use 1 to 3 patterns or the infinite 4 or higher lower trends. So you can also go to lower time frames and wait for a trend shift. It's also a very good sign, can be a very good sign. Or in addition, you use the order flow, but not everybody in the beginning wants to use order flow or order flow data because too much information can be also confusing, although it can be very valuable. If you look at order flow, for example, you look at finished auctions, unfinished auctions, or high or low volume areas in the footprint chart. We'll dive deeper into that, I think, in series 600 or 700. Third step or possible option is that you just take partial profit. So when you are inside, for example, you take a partial profit at the POC, so you don't need to hold the trade through the whole trade idea or the whole trade plan. So now we will discuss the stability of a market within a value zone. So if we open outside of a value zone and we accept the previous profile, and at some point we are going to accept the previous value area range because we stay a long time in there, we will look for longs at the value area low with different or through different setups. But when we accept the value area and the market runs into a value area or a high volume cluster, our plan always is that it trades through the cluster completely, either from the top to the bottom or from the bottom to the top. Confirmation points or confirmation, you can consider that the market on a daily time frame should stay in that value area or high volume range for at least 30 minutes. What is the checklist for the daily planning? The following settings should be made when you trade, when you do analysis, when you prepare for your trading and your trading decision, your financial decisions. In the daily chart, there should be, or the daily chart should be loaded on the software you use with maximum backward data. So the maximum backward data that is possible to load there. Identify and then draw the mountains and the valleys we explained earlier. So you have mountains and you have valleys, and the mountains are the big. So if we have a profile that looks like this, profile that looks like this, we have valleys and we have mountains. So this is the mountain area and this is the valley area, for example. Then we have another mountain here. This is not really a valley or a low volume area. We have the next one down here. And when price enters there and accepts the price, or accepts this high volume area, accepts this mountain, our plan is that price trades through it. Same happens if the price accepts that high volume area from the top, it will also trade through it. So, but you need to analyze those things, for example, on the daily time frame and implement them on a 30-minute chart. So you need to transfer the mountains and the valleys to a 30-minute chart. So you have the data on there. From the higher time frame, you can also use the monthly valleys for the weekly chart, the weekly valleys or mountains for the daily chart. It doesn't matter which time periods, depending on the trading style, you will decide. On the 30-minute chart, you open with 50 days back to load. You will draw the value area high or low of the previous day. In most software, you can just draw them automatically or extend them automatically if they are naked. And then you draw the POC or VPOC from the previous day. And after the start of trading, you create a plan for the intraday path and transfer it to the 30-minute chart. And if you want to do some exercise, just take this naked chart and try to repeat the options that we just went through. Just a quick break, so you can pause, you can make a screenshot, you can do it for yourself, or you can download exactly that file maybe next to the video. So we have different variants. We always extract support and resistances out of the profile. The most basic variant, because most of the time markets are in value, we open inside, we open between the value areas. Then we search for longs on the value area high or shorts on the value area high and longs on the value area low. Most of the time there will be a reaction at the POC. That is variant 1. Then we have variant or option 2. In option 2 we open between the value area and the absolute high or low. So we open in here or we open in here. And at some point we will start to accept the value area. And then, of course, again, we look for longs on the value area low, for shorts on the value area high. Again, there can be reactions, or most likely are reactions at the POC or VPOC. Option 3 is we open outside the previous profile range. And then we just assume that price will continue in the direction of the gap, because between the absolute of the previous day and our opening price there will be a gap, and we think, or our plan is, that price just continues in this direction. In variant 4, which is the last one, we open outside, but very fast we start accepting the previous profile, we wait for the acceptance of the value area, and then we will look for short trades, again reactions at the VPOC, and the same thing from the other side. We will accept previous profile, accept value area, and then continue upwards. That's understandable. Hope you had it right when you did that exercise.